Good afternoon, everyone. I want to thank you for participating in our 2025 Tax Clinic for Nonprofit and Faith-Based Organization. My name is Anita Taylor, and I'm the District Director to Congresswoman Clarke. Due to her scheduling conflict, the Congresswoman would not be able to attend today's event, but she brings greetings. I bring greetings on our behalf. Thank you for participating in today's virtual tax clinic. I want to thank the outreach team for putting this event together by providing you with tools, resources, and assist your nonprofit in navigating complex tax regulations and guide faith-based organization through tax regulations and financial management for compliance. I want to thank the panelists. I want to thank Professor Sharon James from McGivis College, Kelly S. Matthew from the Chief Operation Officer for VP Financial Management Group, New York City Council of Profits, from NYC Con, and Alan Federman from CPA. I would also like to thank the faith-based organization and leaders that is joining us this afternoon. Pastor Charles Godfrey, Ashma Mehdi, LMHC, Chief Operation Officer, Moha Attar, Chief Financial Officer, Council of People of Organization, Rabbi Cohen, Eli Cohen, Executive Director of Crown Heights Jewish Community Council, and Pastor James Thornton, Senior Pastor of Salem Missionary Baptist Church. These nonprofits and faith-based institutions are critical in New York, in the 9th Congressional District, and across the country. These organizations respond to community needs by providing social services, after-school programs, and activities and mentoring to marginalized communities. You have frequently have a lot of questions, and these experts here today would be able to answer all your questions. And we appreciate you taking the time out of your busy schedule to participate with us and to join us this afternoon. I want to thank again the participants. And if you have any further questions, please feel free to call our office at 718-287-1142. And thank you for visiting and for participating in today's event. Thank you.
Thank you, Anita. This is an amazing opportunity that we get to engage our nonprofit organizations and faith-based organizations in the area of tax preparation. So what I'd like to do right now is introduce Reverend Dr. Charles O. Galbraith, Senior Pastor of the Alliance Tabernacle, Brooklyn. Reverend Charles is also known as Pastor Charles, is the Senior Pastor of the Alliance Tabernacle Church in Brooklyn, New York. He also pastors Bowie New Life Assembly Church in Upper Marlboro, Maryland. And he is also Dr. Galbraith serves as the Assistant Professor at Ministry for Apostolic Theological Seminary. Going back and forth, we always see him in the community. Pastor Galbraith, the floor is yours for brief comments and just your insights. Thank you.
Thank you, Orlando. Thank you for inviting us, as well as this opportunity to share. We say thank you to the Congresswoman Yvette Clarke for her leadership and for putting this forum together, to Anita Taylor, our district leader, who's organizing and connecting with us, as well as my other faith colleagues, as well as those who are experts in this particular area. I just wanted to note the significance of this and want to say thank you for doing this work as we look at the concerns as well as the opportunities in regards to addressing our IRS challenges, as well as the tax dynamics within congregations, as well as faith-based organizations. Additionally, while I also pastor a church, I also help to lead two nonprofits here within the city of New York. They're addressing this. One of the challenges that I think could be helpful for us as we are engaging in this moment is many times as practitioners, we are engaged in doing the work and offering the services. And so our heart's direction and guide is to be able to engage within the ministries, serve the people, making sure that our payroll is in order and all those different things. And so the concerns concerning IRS, as well as our tax responsibilities, as well as our other responsibilities, can sometimes be a challenge when we don't have the proper guidance as well as the built out infrastructure.
Oh, I think we actually lost him for a second. Pastor Galbraith. I think it's something with his. Let's move on. We're going to move on to our next. We'll get him back in a few seconds. So we're going to now move on with Professor Sharon Yvonne James from Medgar Evers College. She's coming to the stage right now. Thank you for our final part, Dr. James, for taking time to being with us. Dr. James, as you know, she's a professor at Medgar Evers College and has a wealth of knowledge in the accounting and finance industry. And she's going to take us through her presentation that she has prepared for today. Dr. James, the floor is yours.
Thank you, Orlando. I want to again thank you and thank the team at Congresswoman Yvette Clarke's office and for putting the clinic together. As Pastor Galbraith just alluded to, running a nonprofit can be very challenging and overwhelming. And as practitioners, as you mentioned, and leaders, we just want to make sure that we're engaging with those we serve. And sometimes so many things get, fall through the cracks in terms of how the organizations is managed and making sure that we keep up with the compliance. Want to make sure. So today I'm going to just take a few minutes, about 5 minutes, just to go through some simple, basic bits of information that we need to be aware of as we manage and run our organizations. And just want to take a few minutes to do that. I know my other colleagues and speakers is going to tap into some of what I'm going to share as well. So I'll just take a few minutes to do a quick run through. Next slide, please. Slide. Thank you. So it's so important to be able to preserve our tax-exempt status. It's a wonderful privilege to organize and to run a nonprofit. So many people have needs, and there's just so much information that people in the communities need. But it's so important to know that as we serve the community, as we serve those who are in need, to make sure that we preserve our tax-exempt status. And how do we do that? Well, first of all, we need to know how to stay compliant with the IRS and state regulations. We need to be able to know what we need to do to stay compliant. What are the IRS regulations? What are the state regulations? At the end of every period, some organizations do have a calendar year. Some organizations have fiscal years. We need to know at the end of our fiscal years or calendar years what's expected of us. And what's expected of the tax-exempt organizations is to file the annual 990 or 990 easy forms. We call it an information return because it's not actually a tax return, but it's an information return, the Form 990 or the Form 990 easy. At the end of every period, at the end of the year, if it's a calendar year, you prepare your documents at the end of the year, and you have until at the end of May 15th, I think, annually, to be able to make sure that you're compliant with the IRS and with the states in which you operate. In some states, the organizations need to also file an annual report. So you need to know what's expected of you from your state and from the IRS as well. One of the things that the exempt organizations need to be aware of to preserve your tax-exempt status is to avoid political campaigning activities and excessive lobbying. Nonprofits are strictly prohibited by the IRS from engaging in political campaigns in terms of supporting candidates. And so you need to know the rules, surrounding that. And also to make sure that you use your funds only for your exempt purposes. The laws and regulations governing tax exempt is very broad. It's huge. And so we need to know what be clear about your exempt purpose to make sure that you're operating within your exempt purpose. Next slide, please. Okay. Now, a key area to be aware of as well, as we talk about to use funds only for your exempt purpose, anytime you go outside of that purpose, you actually falling into the realm of engaging and generating unrelated business, which means that you'll also be generating unrelated business income. As long as it's outside of your tax exempt purpose, that you totally IRS and that you totally the system that you're operating your nonprofit for. When you fall outside of that purpose, you're actually generating unrelated business income. Now, anything that's not related to your mission is considered unrelated, and it may be taxable. For example, rental income. You didn't set up the nonprofit to organize rent or real estate. You didn't set up. You actually set up the organization for you to serve the public. Let's say that you're serving youth in need, maybe education, helping youth to stay in school, and maybe that's your purpose. But maybe the organization has a building and want to share that building with maybe other nonprofits. And that building actually start generating rent. Well, that rental income is actually unrelated business income, because your purpose is not rental. Your purpose is actually serving the youth, right? Making sure they stay in school. And so that's what your purpose when you set up your organization. That's what you said you were going to do. So if you're generating rental income, if you're selling merchandise, that wasn't what you told the system that you were going to set up your nonprofit for. So anything outside of that, you will be generating unrelated business income, and it may be taxed. If you determine, or if your leadership or your accountants, determine that you have generated unrelated business income, then you may be required to file Form 990T, if that applies. It's also important to carefully track the income sources. That's very, very, very important, that you know exactly where your income that you're getting is coming from. So you'll be able to know whether the income is actually unrelated or if it's related to your mission. Next slide, please. Okay. Now, tracking the funding sources, well, of course, you need to know where your money is coming from, as I said before. Is it from donations? Is it from grants? Is it from contracts? Or is it unrelated business? So you need to be able to track whatever money's coming, whatever revenue comes in, you need to be able to track that as well. It's also important to maintain your donor and grantor documentation. Who is providing you with the funding? That is important, because at the end of your fiscal year, at the end of your calendar year, the donors or the grantors need to be able to get documentation that says, they funded you. Maybe donors may need to get documentation for so that they can give to the accountants. At the end of the year, we normally tell them that your donations are tax deductible. So it's very important that you maintain documentation regarding the donors that you're receiving this money from, or the grantors that you're receiving the money for. You also need to ensure that the funds are designated. You're collecting funds to help serve the youth, maybe scholarship funds, maybe whatever it is, whatever you actually collected that money for, You need to make sure that it's used and is designated for that purpose. It's also important to increase accountability. When you do that, when you ensure that you want to make sure I say that, when you ensure that you have you maintain your donor and grantors documentation. Not only that, when your donors and your grantors have an idea of exactly what you're doing with the funds that they're supplying the organization with, that increases accountability and donor trust. Donors willing to give more, or they're willing to continue giving because you're transparent with them. They know exactly what you're doing with their funds as well. Next slide, please. Now, one other thing that helps in terms of maintaining your exempt status is to make sure that you provide accurate reporting of donations and grants. Okay, document your donor and gift, document donors' information and the gift restriction. That is so important that you know what the restrictions are, how much money can you collect, and based on the money that you collect, when do you have to report it? It's so important to be able to know that. As the next item says here, you need to acknowledge on your annual information returns in 990 or the 990 easy. You need to acknowledge contributions over $250. So although if somebody gives you $5 or $10, you want to thank them as well, but you need to be able to acknowledge, especially on your forms, your reporting forms, you acknowledge contributions over $250. And of course, you need to maintain proper records. Why? For audits. You never know. It's very important that, especially when you have large organizations get audited, every period. Small organizations, not so much, but you might never know when your organization might be audited. It's very important that you maintain proper records. So if you run into an audit, you have your records streamlined, and you have no problems. You also want to make sure that you use standard accounting practices. You use GAAP, and of course, to do that, you will need a professional to guide you through, an accountant or a CPA to guide you through, help you to understand what the standards or the GAAP standards are to use for your finances and for your organization as you run your organization. Next slide. Okay. And so as I wrap up, here are some key takeaways. Compliance sustains your mission and your tax exempt status. If you're not compliant, well, guess what? You easily lose your status. If you lose your 501c3 status or your tax exempt status, it means that you will not be able to collect funds from the public. Not being able to collect funds from the public means that your organization would not be sustained. Okay, you need to also be able to make sure that you understand and manage the, any income that we say that is unrelated, any unrelated business income that is taxable. You need to be able to understand it and to be able to manage it. And of course, you have your professionals, your CPA, your accountant, to be able to help you to manage that as well. As I mentioned before, transparency builds trust and sustainability. If you're transparent with your donors, you're transparent with those you serve, it means that you will be able to continue receiving donations because people will trust you. They will trust your organization, trust what you say. It's very important to be able to do that. So you understand how to manage the unrelated business income. You track and report your funding with care because all of that leads to transparency. It builds trust, and it also helps to sustain your organization. I know that my other presenters, my colleagues here, are going to share a little more of what I just touched on. But again, I want to thank you, Orlando, for allowing me to share, and I look forward to hearing from the other speakers as well. Thank you.
Thank you, thank you, thank you. Thank you so much, Dr. James. We really appreciate your contribution to this program for our IRS, for our faith-based and nonprofits. in the district. So now I'm going to bring to the stage Ms. Kelly Matthews, Chief Operating Officer, Senior Vice President, Financial Management Group of the New York Council of Nonprofits Incorporated. We call it NICON. In addition to that, I'm going to be bringing also Mr. Alan Fetterman, CPA, MBA, and he is also going to be assisting Ms. Matthews on breaking down different substructures and information pertaining to our nonprofits and our faith-based organization. One little thing I want to say about Ms. Kelly. Ms. Kelly has dedicated over 25 years to serving nonprofit organizations, has been in NICON's financial management group since 1998. And Mr. Alan Fetterman, CPA, MBA, lectures extensively on nonprofit accounting, auditing, federal singles audits, tax-exempt issues, and governance throughout the country at conferences, seminars, and webcasts. With that being said, the floor is yours.
Wonderful. Thank you all so much. I appreciate Orlando and Representative Clarke and everyone reaching out and inviting us to participate. Of course, it's a technical topic. And though I work a lot in my history with faith-based organizations of all different types, I had to reach out to Alan and say, would you join me today? So I appreciate Alan joining, and we will need to see our PowerPoint. There we go. So you can go ahead and advance the first slide. And, you know, so both Alan and I both do a lot of training. For Alan trains a lot of CPAs, a lot of large organizations, boards of directors, as do I. But we always start off, I think both of us, talking about mission, and Dr. James referred to it. Mission matters. So whenever your organization was created, no matter how long ago, NICON was created in 1927. But the core purpose of why we exist remains the same. And it's the tax exempt purposes to which our resources have to be devoted, as Dr. James said. And our official statement is at some point somebody incorporated. And so Department of State maintains those incorporation papers and a little bit of housekeeping. If for some reason you have an ink behind your name and you don't have a copy of your incorporation papers, you can reach out to DOS. There's actually an online system at New York State Department of State, and you can get a copy of your original certificate of incorporation and any amendments that have been filed over your long, perhaps, history or short history. So we can advance to the next one, please. So who we are determines how we use our resources. We can move on. Next slide, please. And now, how do we get tax exemption? So many of us incorporated in New York State first, and then we applied for tax exempt status. And we do so by the Form 1023, which is the application for tax exemption under subsection 501c3 of the Internal Revenue Code. There are several different subsections of 501c. There's 501c1, 2, 3, 4, 5. There's a whole list of them, but we are the most coveted designation because, as Dr. James referenced, the public can give us resources, and it's subject to it. It's called a charitable contribution that, you know, if they contribute enough and adjusted gross income as such, they can claim that as a charitable contribution and a tax deduction. Likewise, private foundations can give us money. Private foundations, family foundations, corporate foundations, they have to pay out 5% of their earnings each year. And they can that only counts that 5% to 501c3 organization. So it's a very coveted section of the code. Now, not all nonprofit organizations are tax exempt, but to be tax exempt, you must be described in section 501c3 of the Internal Revenue Code. If Form 1023 is filed within 27 months after the end of the month, which the organization is legally formed, and the IRS approves the application, the legal date of formation will be the effective date of the exempt status. If Form 1023 is not filed within 27 months of formation. So again, you may incorporate and start doing work as if you're a charitable organization. And if you filed 1023, the application for exemption, within that 27 months, that effective date is retro, right, Alan? That's what you're saying there.
Goes back to the date of formation.
That's right. But if you keep going and don't apply for tax exempt status, and you're not using a fiscal sponsor, somebody else who is the tax exempt entity that you're functioning under, then your application is not retroactive. So all that activity is basically moot. Okay, you can advance the slide, please.
If I may, Kelly, one
yes.
of the big advantages of filing after 27 months is that any donations that you receive during those first, let's say you filed it in the 30th month, all the donations you receive for those 30 months will not be tax deductible to your donors.
Right, right. Now, all churches are faith-based organizations, but not all faith-based organizations are churches. The term church in the Internal Revenue Code includes synagogues, temples, mosques, etc. Churches are not required to apply for tax exempt status, even though we just talked about it. Most of us that are in the charitable world, my organization is a statewide association of charities, but it's a 501c3, just like all of our nonprofit members. We have 3,300 statewide. We're a charitable association. Unlike like a C6 trade association like the American Institute of Architects or Chambers of Commerce, we are a C3 just like all of our nonprofit members. Now, we applied for tax exemption before the 1023 existed, but we do have a determination letter from the Internal Revenue Service. Organizations that were, since the Form 1023 was created by the IRS, it is subject to public inspection for those of you who did apply via Form 1023. The important thing, though, is not all faith-based organizations have to use it, but you might want to apply, even though you're exempt from applying for tax exempt status, most churches, you might want to apply for tax exempt status, even though you already have it. I know it's weird. But the reason is then you would have an IRS determination letter. And that's an advantage you may need for grant applications. And Alan's got some examples of why that might be necessary.
Just a quick one. I mean, a church does not have to file 1023. They're automatically tax exempt. But if they don't have that determination letter, they may not be eligible to receive certain foundation grants or even government contracts. Sometimes the government will actually ask a church, let's see your determination letter, and then you'll be eligible for this grant. Well, if they don't have a determination letter, they're not going to get the grant.
Okay. You can advance, please. Again, obtaining tax exemption. Other faith-based organizations like mission organizations, non-denominational ministries that do not meet the criteria of a church must use Form 1023 to apply for tax exemption. Faith-based organizations must withhold income tax, Social Security, and Medicare from employees. However, clergy members are treated as self-employed for Social Security and Medicare. Social Security and Medicare are not withheld from the salaries of clergy members. You can advance. Tax exemption, a group exemption is a type of tax exempt status granted by the IRS to a central organization and its subordinate organizations. Instead of each subordinate organization applying for their own individual tax exempt status, the central organization or parent can obtain a group exemption that covers its subordinates, simplifying the process. I'll give you an example. Although some of them do have independent tax, Catholic Charities, Diocese of Albany. It's under the Diocese of Albany. They hold the C3. some of those individual groups underneath them have gone ahead and applied and received their own individual tax exempt status, primarily for the reason that Alan just described, because they wanted to be able to contract with the state and federal government as their own entity, as opposed to passing that through the parent organization. Another example is Cornell Cooperative Extension. Even though they're not faith-based, all the little cooperative extensions in every county of New York State has a tax exempt status because it's under the group exemption of Cornell University Cooperative Extension. So that's a group exemption. And Alan, did you have a comment?
No, nothing at the moment.
Okay, I thought you said something. Sorry. The central organization could be a national religious organizations. The subordinate organizations are under the control or governance of the central organization. All must be exempt and follow the same protocols. There has to be policies and procedures for each of those groups under the parent corporation. And in some cases, the organization can file a consolidated Form 990, as the annual information return we file with the IRS for all covered subordinates. So it's important, I guess, before I segue over to Alan, to understand, are you a 501c3 by virtue of application for exemption individually? That's important to know. And if you did, do you have a determination letter? Also, did you incorporate? And if so, do you have your certificates of incorporation? Those are just housekeeping items that each, generation of leadership should be sure that they have on hand for accountability, transparency, and just to understand the nature of your own organization. And now I'm going to turn it over. We can advance, and Alan's going to take the next few slides. You can go ahead. Oh, here we are.
Next slide, please.
This is parsonage.
No, you skipped
Alan.
there. All right, thank you, Kelly. Let's talk about a few things specific to faith-based organizations. The first would be parsonage. There's a section in the Internal Revenue Code that grants ministers an income tax exclusion from gross income for the value of a residence that they receive in kind from an employer, if that's in fact the case. And by the way, just like in the Internal Revenue Code, the word church includes all types of churches, synagogues, mosques, etc. The term in the code minister is all clergy persons, ministers, pastors, priests, rabbis, cantors. I mean, they're all ministers. There's another section of the code, if they don't get an actual parsonage to live in, but the employer provides a parsonage allowance or a housing allowance, that's a tax benefit to clergy persons. It allows ministers to exclude part or all of their housing expenses from federal income tax, but it's still subject to self-employment tax, that is Social Security. Next slide, please. The clergy member, in order to be eligible, must be ordained, licensed, or commissioned, and must perform ministerial duties such as preaching, leading worship, or providing pastoral care. The church or employer must formally designate the housing allowance before paying it. That is, it must be approved prior to the beginning of the calendar year, even if the church is on a fiscal year basis. It should be documented in the church or employer board minutes or an employment contract, and it cannot be retroactively designated after payment. It's got to be approved prior to the beginning of the calendar year, or the minister loses that portion of their housing allowance being tax-free. Next slide, please. Now, how does it work? Okay, so let's say before the beginning of the calendar year, the minister says, of my salary, I'm going to make up numbers, of my salary of $100,000, I want $60,000 to be my housing allowance or parsonage allowance, and it's approved by the board of the church. The minister does not necessarily able to exclude $60,000 from tax, because the minister can exclude the lowest of three things from taxable income. First, the amount officially designated as a housing allowance by the church or employer, that would be the $60,000 requested and approved. Or secondly, the actual housing expenses incurred, for example, rent, mortgage payments, utilities, property taxes, furnishings, repairs, insurance, cleaning service. And thirdly, the fair rental value of the home, including utilities and furnishings. So the minister, even though 60,000 was designated by the church as parsonage, if the minister only spends $45,000 on rent, mortgage, utilities, etc., that's what the minister can exclude from taxable income. Because the excess that they receive, the other 15,000, for example, would be taxable. But keep in mind, they're still subject to Social Security tax on the parsonage. Next slide, please. Now let's talk about the difference between a public charity or a private foundation. Every organization that's exempt under Section 501c3 is one or the other. They're either a public charity or a private foundation. The difference is simple. A public charity typically has a broad base of public support, while a private foundation generally is supported by just a few individuals, such as members of a family or a business corporation. Next slide, please. Now, why do we want to know the difference? Why do we want to be a public charity? Well, here are 4 reasons right off the top. First, private foundations have to pay an excise tax on their net investment income. Public charities do not. Secondly, individual contributions to public charities and private operating foundations, and a private operating foundation is a type of foundation that kind of operates like a charity, like a public charity, but they're really not. Contributions to public charities are limited to 60% of adjusted gross income of the donor, while contributions to private non-operating foundations, those are just grant-making foundations, the limitation there is either 30 or 20% of AGI, depending on the nature of the contribution, cash versus property. So big advantage to the donors. Thirdly, private non-operating foundations, that is grant-making foundations, must meet a minimum qualifying distribution test. If they don't meet the test, if they don't distribute enough money in their fiscal year, they'll be subject to penalties, fines from the IRS. And lastly, and people would say this is not a big advantage, public charities file a Form 990, private foundations file the 990-PF. It's a much more complicated return. Years ago, before computer programs, the 990-PF, in my former firm, I was with a public accounting firm that dealt only with tax-exempt nonprofit organizations. We had something like 1,000 nonprofit clients in the New York area. If you were assigned to prepare a PF, it was considered a punishment because it was such a complicated return. With computer programs, it's not such a big difference anymore. But you'd rather file the 990 than the PF. Next slide, please. So how do we become a public charity? Okay, we're a 501c3. We're tax exempt. We have our determination letter. How do we become a public charity? Well, first of all, automatically, churches, schools, and hospitals are considered to be public charities. So if you're a church and you're exempt under 501c3, you are by definition a public charity, not a private foundation. But what if you're not a church or a school or a hospital? You're just a 501c3 direct human service organization, community-based organization, national charity. How do you become a public charity? Well, you can be a publicly supported organization under Internal Revenue Code sections 509A1 or 2, A1 or A2. Publicly supported means you get a broad base of public support. If you're not that, you can be a supporting organization under Code section 509A3. That's a little more complicated. Time doesn't permit to go into that. That discussion is a half hour, that one bullet. And lastly, 509A4, that's what we used to call the Ralph Nader type organizations. Organizations organized and operated exclusively for testing for public safety. So let's key in on the publicly supported organizations, the public support test. Next slide, please. To be classified as a public charity based solely on the public support test, an organization has a choice on the Form 990 Schedule A. There are 2 tests, 509A1 or 509A2. Basically and simply, without going into any details or without drilling down, to be considered publicly supported, the organization must receive a substantial part of its support i.e. revenue, from the general public or the government. And substantial, interestingly enough, under the code means 1/3 of your total support must be public support, that is, from the general public or governments. But remember, and this is important to the people I'm speaking to today, churches do not need to meet a public support test. They are automatically public charities. Next slide, please. If you want further information on tax-exempt status, I highly recommend downloading for free from the IRS website, publication 557, tax-exempt status for your organization. It is chock full of information. It goes a lot deeper than I just did. It's not a short document, but I do highly recommend it. Next slide, please. All right, so a charity gets contributions. What are their requirements? How do they acknowledge it? Interestingly enough, a charity has no disclosure requirements for cash or non-cash contributions for which the organization provides no goods or services in return. In other words, a straight contribution, nothing given to the donor in appreciation of the contribution. Remember that the donor needs to get a written acknowledgement if the contribution is $250 or more. If it's less than $250, the donor can use a canceled check or any other kind of tax or bank record. Once it hits $250, the donor needs to get it. The charity should give it to them. But there is actually no disclosure requirements on the part of the charity. Any written statement, whether it's given for any individual contribution or if it's an annual statement of all contributions received by the charity from one donor, it should contain a lot of information. You can see without reading them what it entails just by glancing at this list of 6 bullets. But I want to key in on the last 2. Well, the last 3 actually. A statement that no goods or services were provided by the organization in return for the contribution, if that's in fact the case, or a description and good faith estimate of the value of goods or services, if any, that the organization provided in return for the contribution. And that doesn't include things like a mug or a t-shirt. That's immaterial. Technically, the term is nominal. And then the last one, this is really important again concerning who we're speaking to today. That acknowledgement should contain a statement that goods or services that were received by the donor consisted entirely of, quote, intangible religious benefits, if that's the case. Intangible religious benefits. Look, I belong to my synagogue. I pay my dues to the synagogue. That becomes tax deductible as a contribution because all I'm receiving are intangible religious benefits. The right to attend worship services, the right to use our rabbi or cantor for pastoral services, etc. Intangible religious benefits. Very important because dues paid to a church or synagogue are tax deductible, as is, interestingly enough, school tuition. If your child or grandchild, you're paying for what we call Sunday school, even it could be as Tuesday afternoon, but it's religious training not leading to a green, that's tax deductible as a contribution. Good to know. Next slide, please.
Orlando, did you need to, how are we for time?
Yeah, so I just wanted to know if he has any more slides because we want to also bring on everyone to have the Q&A because we want to make sure that we have enough time for that.
I have about 11 more slides. I can move very quickly through them.
Okay, all right.
So Kelly, let's hold off on
instead of doing 11, let's try to do about 5 more.
Just pick a couple of highlights.
All right, well, okay. Quid pro quo contribution. Understand if an organization has a fundraising dinner or a golf outing, they get money to attend. Only part of it is deductible. The amount paid less the value received. That's the quid pro quo. Next slide. Just keep in mind that the organization has an obligation, a responsibility to acknowledge contributions for quid pro quos in excess of $75. It must be done. That's the law. Next slide. Okay, very important. Raffles. The IRS considers amounts paid for raffles not deductible, even if you don't win, period. Auctions. The IRS positions that the winner of an auction receives an item equal in value to the amount paid, therefore there is no tax deductions. And lastly, donated services from volunteers are not tax deductible. Don't give them a letter saying thank you for your donation of your time worth $5,000. That's wrong. Next slide. Further information on contributions to IRS publications. Next slide. All right, you must file the 990 series due on the 15th day of the 5th month, which would be May 15th for calendar year organizations. Very important, bottom of this slide. Churches and their integrated auxiliaries are exempt from filing. However, other faith-based organizations must file one of these forms. Next slide. All right, someone asked specifically that I cover this. Can an organization file a Form 990 while awaiting the IRS determination letter? The answer is yes, so long as you're operating as a charity and you indicate on the form that it's in progress, the application. But if it's denied, you're going to have to go back and file a corporate tax return. Next slide. If you lose your tax-exempt status for failure to file a 990 for 3 consecutive years, that could be a problem, but the IRS now has to notify you after 2 years of non-filing. Next slide. All right. These are activities that could jeopardize your status. I was supposed to talk a little bit about political campaign activities. Let me see if I can spend 1 minute on it. Next slide. You can lobby. C3s may lobby, but you can't have excessive lobby. Next slide. Political activities, it's an absolute prohibition. A C3 may not participate in political activities. And that includes rating a candidate, no matter how objective it would be. Next slide.
Okay, I think this is gonna be the last slide, okay?
Okay. No, jump to the next slide. I'll do that as the last slide. Okay. The last bullet, a political campaign activity prohibition is not intended to restrict free expression by, for example, a minister. The minister should not be up on the pulpit stating we should vote for so-and-so for Congress, but in a private function, a minister may certainly express his or her beliefs, so long as I would recommend clearly state that the minister is not speaking for the church, but for his or her own views. Okay.
Thank you, Mr. Fetterman. Thank you so much. Thank you. We're going to keep you on.
Orlando.
We're going to bring everybody on now. Well, first, before we bring everyone on, I'm going to ask you guys to come off the stage. We're going to bring on our faith-based organization, faith-based leaders and nonprofit leaders, and we're going to introduce them accordingly as for time. So the first person that we would like to grace the stage, and everyone will stay on the stage, is Asama Mehdi, LMHC. She is the Chief Operating Officer of COPO in our community, Council of People's Organizations, and Mohad Attar, Chief Financial Officer of the same organization. Each person will have a time and they can speak, and then we're just going to keep everyone on the same page. Rabbi Eli Cohen, Executive Director of Crown Heights Jewish Community Council, and Pastor James Thornton, Senior Pastor at Salem Missionary Baptist Church. Thank you, clergy, for coming on. I would like for each person to introduce themselves in that order, and then we will go back to our Q&A, okay? And the floor is Asama Mehdi is yours.
Okay. Actually, Orlando, it's Asma Nazi now. And well, Dr. Asma Nazi, I don't know how old the bio you have is, but that's okay. So I'm the Chief Operating Officer here at COPO. I run, the day-to-day operations with my CFO, Mohad Attar. You can go ahead.
Good afternoon, everybody. This is Mohad Attar, CFO at COPO, Council of People's Organization. I am prepared to make some comments on all these pertaining and relevant topics. My question is how much time we have at this point.
So we're technically are supposed to end this approximately at around 2 o'clock. And so that was the time that we were supposed to go. But we want to make sure that everyone is here. And all you're doing is bringing greetings. And then we're going to bring in the Q&A. And when the Q&A comes in, you can answer questions there.
Okay, so we are happy to be part of this webinar.
And the next person will be Rabbi Eli Cohen from the Crown Heights Jewish Community Council.
Thank you, Orlando, and thank you to our Congresswoman. Yes, my name is Rabbi Eli Cohen. I'm the Executive Director of Crown Heights Jewish Community Council, which is a multi-program organization based in the Jewish community and serving the entire population of Central Brooklyn.
Thank you, Rabbi. And we have Pastor James Thornton. Pastor, can you just bring a quick reading?
Yes, I'm the senior pastor here at the Salem Missionary Baptist Church. We're actually the oldest African American church in East Flatbush. We are made up of persons from the United States, of course, Jamaica, Trinidad, Nigeria, Liberia, and we try to share God's love in a tangible way. I'm also president of the 7th Precinct Interfaith Clergy Council, where we attempt to work with community and police officers to be safe and to be in a more harmonious relationship. I'll pause there.
Thank you. So now I would like to bring on my colleague. She is also a district representative for Congresswoman Yvette Clarke's office. Her name is Narissa Ng. Narissa is going to guide us now into our Q&A section. We're going to bring everyone to the screen, all the presenters, and then there will be some questions coming forward. And Narissa, the floor is now yours.
Hello, everyone. My name is Narissa. I am a district representative for Congresswoman Yvette Clarke, and I'm just going to lead you guys through some Q&A questions that we have. You can treat this a little informally. Whoever wants to answer, feel free to just pop in. So how are nonprofits able to ensure that they maintain their tax-exempt status under these evolving regulations? I know things change year by year. How can they make sure that they're complying with everything?
Okay.
Well, I'll answer that one. Get a good accountant. It's very important.
Well, speaking of good
you need a
accountants,
professional to guide you. You can't just do it on your own, especially if you're a larger organization. Now, of course, as the presenters mentioned before, if you're a religious organization, you're a church, you're a synagogue, you just play by the rules. It's not very complex because you're just really, conducting your ministry. You have your services. You're not required to file returns, and it's much easier. But if you're an organization that is receiving significant donations, and you're not and you want to make sure that you maintain your status, you must have professional guidance. I don't recommend doing it on your own.
Well, that's a very good point. Dr. James brought out filing the 990 annually is important. Obviously, churches, synagogues, mosques, etc., are exempt from the filing, but they still have to keep adequate records. And I agree with Rabbi Cohen. A professional is very important. And I've been in the nonprofit sector now for 57 years, serving nonprofits as clients, where my firm provided a lot of guidance to a lot of nonprofit organizations. And I've been lecturing for the last forever, 40 years at least, on the same thing. So Rabbi Cohen, Dr. James, absolutely correct. Professional is essential because it's simple to comply, but if you don't have someone to guide you, it's easy to not comply.
Right.
Can I just say one thing to that?
Mm-hmm.
I think one of the things that people don't know when they think of churches as being tax exempt, we are tax exempt from things that you purchase. However, if you have staff and you are paying them, you have to pay payroll taxes.
Good notes for that. I know navigating the system can be so complicated. Even you, Mr. Fetterman, doing this for so many years, you still say go to the professionals. Lots of going there. So what are some common pitfalls that organizations might face when managing unrelated business income tax, and how can they avoid them?
I mean, the IRS looks at two different things when they're determining what is UBIT. They look at, is it substantially related to mission? Answer yes or no. And is it regularly carried on? So do we do that thing, whatever it is, once a month? One quick example is a local volunteer fire company in my community in upstate New York. They do a pizza night every Saturday of every month. Is that regularly carried on? The answer is yes. Is it part of their mission? No, because their mission is to protect the community and put out fires and send an ambulance, etc. So the two questions, the answer is no, it's not related to mission. or yes, it's regularly carried on. So to the IRS, it looks like a trade or business. Now, there is I would highly encourage everyone to read the publication on the IRS website about unrelated business income, because there are a lot of gray areas. But in this case, because at the pizza night that's very well attended from the community, they use all volunteers to make the pizzas and the salads, etc. If they paid staff to do that, the whole endeavor would be subject to unrelated business income. So that's something that we only know by reading the guidance that the IRS, or working with a professional, as the Rabbi and Alan and everybody has pointed out. But there's a wonderful publication called Unrelated Business Income Tax on the IRS website. You can search the forms and publications. And it gives you some really nuanced examples that are very, very helpful.
But keep in mind that Kelly's example is a good one with the pizza night.
Right.
You're allowed to deduct expenses against the revenue. So if they charge people to come into pizza night, that's the revenue. The expenses could wipe out all of that revenue. So it's important to keep adequate records. Also, and I'll go one step further than what Kelly said, the UBIT regulations in the code are probably the most complicated arena in the tax-exempt world. It is extraordinarily complicated. I mean, I can do a 1-hour talk just on UBIT and only cover the surface. There are certain items that are exempt from UBIT, even though they're not that necessarily mission related. For example, interest, dividends, rents, and royalties. Rents of real property are actually exempt from unrelated business income tax unless the property is debt financed. Then it is subject. And the whole explanation of what debt finance means. No time to go into that, but it gets very complicated. You really need to know the regs.
Yeah, absolutely. Thank you guys so much for that very in-depth answer. I think a big takeaway is, yes, use the resources that the IRS gives you and look into those, which is very, very helpful for them. And then my last question towards the presenters today is, what are some of the key steps for organizations awaiting 501c3 status so that they can remain compliant with BOI reporting requirements?
Did you say BOI?
Yes.
New information. Go back in time. The Corporate Transparency Act, the CTA, was passed a few years ago. It required the reporting of beneficial ownership information, or BOI. There's been a whole fight over it for the last year. It became effective. You have to have a report in by the 1st of this past January. But there was then a court case that put it off for a while. Just either last week or late the week before, so certainly within the last 10 days or so, a final interim regulation. I'll understand what the term final interim means. Is it final or is it interim? We don't know, but it's a regulation that has now been passed that said U.S. companies and U.S. persons are now exempt from reporting BOI under the CTA. Exempt. So every U.S. corporation, be it a tax exempt or a taxable corporation or a person that has a beneficial interest, you now do not have to file the BOA report under the Corporate Transparency Act.
Okay. Good to know.
That just came out within the last week or so.
You're really on top of it. That's great. I did not know that. Amazing. So now I'm going to direct some questions towards the faith-based leaders. Do you guys want to share, if you're familiar, some unique compliance challenges that faith-based organizations face compared to nonprofits?
Again, I'm happy to go first. I actually don't run a faith-based directly. We're a secular charity. Crown Jewish Community Council has Jewish in our name, but I do have one of my children is running a little synagogue, student center upstate on a college campus, and I know there were a lot of challenges with regard to that was mentioned about parsonage. So when you're a minister or rabbi or chaplain or imam is, you know, the theory is, I guess, that it costs them money to live in an area that they wouldn't otherwise be able to live in order to serve a community. So they are permitted to deduct to take off from their taxable income the amount of their housing allowance, so or rent or mortgage, or if they live in a property that's owned by the church, that's not that benefit is not taxable to them. So that's a very difficult one to negotiate. And I actually learned a couple of new things from Alan in his presentation when he spoke about the law of the three items, which are the actual cost of the housing, and I don't remember what the second was, and the third one was whatever was designated. So you could repeat that, but I thought that was very good because I wasn't aware of that before, and I know that this is something that my child, when dealing with setting that up, had to know about having it designated before. Not all of those things are very, very important. So that's worth paying attention to. Also, there was one more I'll just give you, and that is, there was actually a contradiction between the two presenters about the Social Security and clergy. So there is a possibility for a clergy person to file for an exemption for Social Security if they have taken a vow of poverty, and I think a lot of clergy people have used that in the past. And there is a negative to that, and that is that you're not paying into the Social Security system. That means you're not going to get retirement benefits. So I would urge clergy people to be very cautious with that and not use it. I mean, I'm now 65. I'm collecting Social Security. There were years that I was a rabbi, also doing, ministering to a campus population. And I'm happy that I did pay into the Social Security system and got my quarters so that now I'm able to collect those benefits.
Yeah, well, I had said before when talking about parsonage that even parsonage, even though free from income tax, the lowest of the three, and the third one, by the way, is the fair value of the rent.
Fair value, right.
Including utilities. But what I didn't mention that because time didn't permit. Yes, a clergy person can opt out of the Social Security system, and you're absolutely right, Rabbi, that could be very dangerous in the future. But here's another point. Once a minister opts out of the Social Security system, they cannot ever come back in.
Great. So what we're going to do now, because I think we're moving quite at a good space. We want everyone. First thing we're going to do, we're going to thank Narissa for her informational, the Q&A. That was a great job that she did. And Narissa, now what we're going to do is going to bring Anita onto the stage, but we want to make sure that everyone on this platform has something to say, final words for tax season as a faith-based organizer or as a nonprofit leader. So please bring on please bring on our Anita Taylor. I keep getting her mixed up with my big boss.
So let's first, and then I will give my final remarks.
Thank you. So the first person that will speak for final words will be Asama. I hope I'm saying it correctly, Newsy, Miss Newsy.
That's okay.
Dr. Newsy. I'm so sorry. It's Dr. Newsy.
Thank you, everyone. Thanks so much for allowing this platform, Orlando. I really appreciate it. I myself learned so many new things today, so I appreciate being part of this team effort.
Thank you. And so our next person will be your there you go, Mr. Attar.
Mohad Attar.
Yes, I actually had nothing more to add.
Okay. Next person will be Rabbi Eli Cohen.
Yeah, hi. So I just want to invite everyone to participate, to use the services of the Crown Heights Jewish Community Council. We're available to the whole community, especially seniors that are dealing with any kind of benefits that they need. We have our crime victim program. Please, if you have people within your community who are subject, unfortunately, to a crime and they need assistance in filing for the compensation from the state, this is something that we do. So we're very, very happy to help people in the community. The Jewish in our name does not restrict who we serve. We serve the entire community. and we're here for your benefit. And we are very appreciative of the relationship that we have with our Congresswoman and with all the wonderful people in their office.
Thank you. Thank you. The next person will be Professor Sharon James from Medgar Evers College.
I'm sorry. Again, I want to thank you, Orlando, and thank the team at Congresswoman Yvette Clarke's office. This is a wonderful, wonderful, wonderful program. I too learned a lot today. You know, the tax law is huge, it's wide, it's broad, and there are changes every year, updates. So it's so important, as Rabbi says, so important to have a profession, have an accountant, a CPA, you know, on your side. But I'm, you know, truly pleased to be here. I'm happy that we, you know, as professionals, able to provide some information to the public. The important thing is knowing what you need to do to preserve your status. It's having a tax exempt status is invaluable. So it's so important that you keep in mind what you need to do. And again, it's too much. We just want to serve the people that we're working with. So make sure you have a professional on your side. Again, I want to thank you for giving us at Medgar Evers College the opportunity to participate and to share. Thank you.
Thank you so much. So now we're going to bring to the stage Kelly Matthews and Mr. Alan Fetterman.
All right, well, I'll start as I always do. Ladies first. Thank you so much, Orlando, for reaching out and being persistent, I have to say, to allow us to participate. And, you know, I've been doing this work now almost 28 years, and I love working with nonprofit organizations. And the thing I find most is you don't know what you don't know. And it's difficult to find resources to help answer those questions. So kudos to Representative Clarke, Orlando, Narissa, the team for organizing this. I know it's not easy putting all these people together and keeping us all into a time frame, but it is so important, I think, to bring the information to the community, because people really don't know what they don't know. They're trying to do the right thing, but they don't know. It's complicated to run even a small charitable organization, whether it's faith-based or health and human service or arts and culture. So kudos to bringing this kind of program out. And you can always visit nikon.org. We are a resource to the nonprofit community. We have several organizations affiliated with us. Board Strong is based in Midtown Manhattan for board governance issues, finding board members. But again, thank you so much for participating and for holding forums like this. I think it's valuable and extremely important. Now, Alan.
All right. Well, I'm going to use the 1 minute that I have now to mention something that we didn't get a chance to mention. I think it's really important. We've been talking about the IRS, but we didn't mention New York State. The Office of the Attorney General regulates nonprofits and fundraisers in New York State and protects nonprofits and their donors from fraud. Keep in mind that charitable organizations operating in New York State are required to register and file annual financial reports with the Charities Bureau of the Attorney General's office. But again, churches are exempt from registering and filing. But even if you're a church, temple, synagogue, mosque, etc., the New York State Attorney General's website contains helpful resources, and that's ag.ny.gov. I want to thank everybody for being here. I want to thank Kelly for inviting me, Orlando and the staff for putting this together, and also thank all the participants out there in Cyberland for attending.
I love it. I love it. Thank you so much, Mr. Fetterman. You have been an extreme source of knowledge for us in preparing for our constituents for, Tax 2025. Great. So now to bring final remarks from Salem Missionary Baptist Church, we have the senior pastor, Pastor James Thornton.
Well, thank you, Mr. Orlando. First of all, I want to thank the Congresswoman, Yvette Clarke. We actually were young people together for this forum. I want to thank you, Orlando, Mr. Orlando, for sort of insisting that I get on this forum. I absolutely learned a lot. So I'm grateful to all the presenters, Professor James and Accountant Fetterman. You'll probably be hearing from me. And I think because I learned an awful lot. But the other thing I think I want to say, just in terms of a closing remark, is that it is very important, I think, that as clergy, I know in terms of our community, that we definitely pay into Social Security, that we purchase IRAs so that we are in a position to live when we retire. And the other thing that I would say is that a lot of our funds come as a result of donations. So it's important to keep good records of those donations and where they come from, to send statements to the persons that give them, and to have a statement, as we do at the end of the year, of our income and expenditures, because people always want to know, what does the church do with the money? And whenever something happens in our community with one clergy person, all of us are affected. I had so many people calling me from around the country if I knew Reverend Bling Bling, who I did not know. And they just assumed that all of us were in a hustle. And that is not the case. Some of us really struggle. Sometimes I don't take my entire salary so that I can make sure that my staff gets paid. But this information has been invaluable. So thank you so very, very much.
Thank you. Thank you. So now I'm going to grace the floor with our district director, Anita Taylor. She's going to close us all out. And I'm hoping that everyone had a really great time receiving all the information that you needed for our faith-based and nonprofit organization. Anita, this floor is yours.
Okay. On behalf of Congresswoman Yvette Clarke and her team, we would like to thank all the participants and viewers who joined us today. We truly hope that this presentation was informative, helpful, and it helped you to navigate these complex tax regulations. We want to thank the panelists, Sharon James, Kelly Matthews, Alan Fiederman, for sharing their knowledge and expertise. We also want to thank the faith-based and the nonprofit leaders, Pastor Thornton, Rabbi Cohen. Nice to see you both. Thanks again for taking the time to be with us today and for sharing your best practices to help navigate these tax regulations. Last but not least, I would like to thank my extraordinary staff, Orlando Raz, Debbie Medina, and Nerissa Neng, for helping to put together this important information. I know it's a lot to take in all at once, but we are here. We are here to help. We are here to support. So please, if you have any questions, don't hesitate to call our office at 718-287-1142. Also, please sign up for the newsletter by visiting clarke.house.gov so that you can continue to get appropriate and real information out here, so that you can hear it from the Congresswoman herself of what is happening in her community. I want to thank you all again for participating and for taking your time out of your busy schedule to be with us today. Thank you so much.
Bye, everyone.